Trump just issued a tariff ultimatum to 150 countries: pay up or get out. Within days, global markets plunged, allies vanished, and even Walmart warned, "We can't survive this." Behind closed doors, his own advisors were scrambling to stop the chaos. There were no deals, no leverage, just a worldwide revolt against U.S. trade policy. What was meant to make America strong might actually be the move that destabilizes it. So, what do you call it when the world's largest economy starts sending out tariff bills like parking tickets? On May 17th, President Donald Trump announced that 150 countries would soon receive letters, not trade offers, not diplomatic outreach, but flat-rate tariff demands. Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick were tasked with delivering these letters, instructing governments on how much they'd pay just to do business with the U.S. The problem? No country had agreed to these terms. Bloomberg reported that even key U.S. allies were caught off guard. Trump justified the move by saying it was impossible to meet with everyone personally. But the truth was more chaotic. His administration was behind schedule, reeling from backlash after the April tariff rollout had sent shockwaves through global markets. Within days, the S&P 500 had dropped 5.3%, erasing $1.8 trillion in market value, according to the Wall Street Journal. Instead of negotiation, Trump resorted to unilateral diktat. Imposing tariffs on 150 nations without formal agreements wasn't strength. It was desperation masquerading as strategy. And the letters didn't prompt compliance, they triggered confrontation. On May 18th, Reuters confirmed that none of these countries had officially received the letters. White House aides privately admitted the letters were placeholders for talks that never happened. Former U.S. Trade Representative Susan Schwab emphasized that there's no legal mechanism for unilaterally setting tariff rates by memo. International trade doesn't work this way. Yet Trump insisted the tariffs would be, very fair. What he didn't say was that tariffs act as import taxes, and those taxes are paid not by foreign governments, but by U.S. businesses and ultimately, American consumers. A 2024 Congressional Budget Office analysis found that 92% of costs from Trump's previous trade war were absorbed domestically. The April tariffs raised baseline rates to 10%, with punitive rates reaching up to 50% on targeted countries. The sectors hit hardest, retail, construction, and manufacturing, were still recovering from pandemic-era disruptions. The letter campaign wasn't policy. It was essentially a collection notice, and the cost was stamped "Made in America." When Trump rolled out his first wave of tariffs in April 2025, he called it Liberation Day. In reality, the only thing liberated was market volatility. Baseline tariffs hit 10% across all imports, with reciprocal penalties up to 50% on 60 countries. Weeks later, not a single trade agreement had been finalized. Key partners, including Japan, South Korea, and the European Union, began stalling negotiations. According to an IMF report in May 2025, global trade volumes fell 1.6% in April alone, marking the steepest monthly decline since the early disruptions of COVID. At home, inflation spiked. The Bureau of Labor Statistics reported a 0.7% rise in core consumer prices in April, with clothing, electronics, and household goods hit hardest by tariff pass-throughs. Walmart warned on May 10th that prices across 8,000 product lines would rise due to higher import costs from China and Mexico. And yet, despite rising prices, Trump's team continued to insist that deals were imminent. White House spokesman Kush Desai claimed on May 12th that quick action is restoring American greatness, though no agreements had actually been signed. The economic fallout was immediate. Capital fled markets, consumer anxiety surged, and economists sounded alarms. Mark Zandandi of Moody's Analytics stated, "This tariff wave looks more like economic malpractice than negotiation. Trump promised 90 deals in 90 days. 3 months in, the tally remains 0. The only document publicly referenced, a supposed deal with the UK, contained language that invalidated its own headline. Negotiations with South Korea and Japan, which the administration claimed were nearly complete, stalled over tariff clarity and enforcement rules. China, once labeled eager to make deals, only agreed to continue discussions. No timelines, no binding agreements, just handshakes and photo opportunities. The gap between Trump's rhetoric and reality is glaring. On May 14th, Commerce Secretary Howard Lutnick claimed, "We're locking in results faster than at any time in recent trade history." But 2 days later, Federal Reserve data revealed a 2.1% contraction in U.S. export volumes in the second quarter, wiping out any supposed benefits from promised deals. The administration's public theater made for headlines, but at street level, the consequences were severe. Consumers felt it immediately. The University of Michigan's May 2025 Consumer Sentiment Survey found that 74% of respondents spontaneously cited tariffs as a source of inflation stress, up from 58% just a month earlier. Small businesses weren't spared. The National Federation of Independent Business reported that 42% of firms postponed investments in April due to tariff uncertainty. Walmart projected 5 to 15% price increases on imports from China, India, and Mexico. Target followed, warning of rising costs across electronics, furniture, and textiles. Large chains could absorb some of the increases, but smaller retailers had little choice: either raise prices or cut staff. In rural areas, tighter margins forced some stores to shut entirely. The U.S. Chamber of Commerce reported that over 1,300 small businesses filed for Chapter 11 bankruptcy in April alone, a 23% increase from the previous year. Families and communities felt the pressure directly. Inflation, disrupted supply chains, and stalled deals painted a grim picture. A trade strategy intended to demonstrate strength instead exposed vulnerability, mismanagement, and the real-world consequences of unilateral action. These weren't just numbers. They were lives rerouted by policy misfires. For every politician insisting the American worker comes first, there was a shop owner forced to explain to customers why a basic blender now costs 20% more than last spring. When Trump declared that the country was winning on trade, it wasn't clear who he meant, because it certainly wasn't the people paying at the register. What happens when the world's largest economy replaces careful policy with poker? In May 2025, Treasury Secretary Scott Bessent defended Trump's unpredictable tariff swings as strategic uncertainty, telling CNN that ambiguity would prevent other nations from gaming U.S. negotiations. But the data tells a different story. It wasn't foreign rivals getting played. It was American businesses. Bloomberg Economics reported that U.S. manufacturers' capital expenditures dropped 11% month-over-month in April, the steepest decline since early pandemic shutdowns. Meanwhile, the National Federation of Independent Business found that 38% of small firms froze hiring entirely due to tariff instability. This wasn't strategic leverage, it was policy paralysis. Companies couldn't forecast costs, retailers couldn't plan inventory, and exporters couldn't confidently sign contracts. A McKinsey Global Institute survey from May 15th showed 62% of CEOs delayed major investments directly because of fluctuating tariff guidance. Instead of squeezing adversaries, Trump's approach stalled domestic growth, triggering what economists now call a self-imposed economic chill. But the worst part? This was only the beginning. Trump didn't just raise tariffs, he built a compound interest machine for inflation. The United States International Trade Commission reported that the average effective tariff rate under his new plan climbed to 38%, combining a new 30% layer with the historical baseline of 8%. These weren't just symbolic figures. The National Retail Federation noted that consumers saw immediate hits. Imported apparel prices rose 19%, electronics 12%, and home goods 14% in April alone. A cotton hoodie from Bangladesh now costs $7 more. A microwave from Shenzhen, $28 higher. Oxford Economics warned that if this tariff spike persisted through the third quarter of 2025, it could shave $128 billion off United States GDP. Even Walmart, the nation's largest retailer, said in its May earnings call that these price increases were structural, not temporary, driven by supplier cost surges across more than 6,000 product lines. While Trump claimed this would level the playing field, the real balance sheet told a different story. American families were footing the bill, with no reciprocal tariff cuts from foreign governments. This wasn't leverage. It was a silent tax at the cash register, and the cost curve was still climbing. On April 15th, after a brutal week that saw the S&P 500 drop 5.3% and the Dow lose 1,700 points, Trump announced a 90-day pause on most new tariffs, excluding China. Behind the pause, however, was panic. A leaked Treasury memo reviewed by Reuters showed internal models predicting core inflation could exceed 5% by July, stripping $200 billion from annual consumer spending. Major firms were already reacting. Home Depot canceled $60 million in appliance orders. General Electric froze a planned Indiana expansion. The United States Chamber of Commerce issued a rare public warning: trade uncertainty was destabilizing capital flows. Trump publicly framed the retreat as tactical. "We wanted bargaining power," he said, "but power implies control, and what unfolded was a retreat under fire." The tariffs hadn't brought nations to the negotiating table. They had brought Wall Street to the brink, and even the 90-day delay offered little clarity. The White House warned that if countries didn't negotiate in good faith, the 50% reciprocal tariffs could snap back. The only certainty was more chaos ahead. The bluff failed, and the cost was American credibility. Former National Economic Council Director Gary Kahn explained in a May 2025 CNBC interview, "Trump misunderstood tariffs. He thought foreign governments paid them. They don't. That miscalculation was mirrored globally. Instead of rushing to strike deals, key trading partners waited Trump out. The European Union issued no formal response. Japan paused negotiations. Canada deepened ties with China, finalizing a $14.2 billion LNG deal that Beijing originally pitched to Washington. Even longtime allies grew wary. French Finance Minister Bruno Le Maire said, "We need stable partners, not shifting terms on demand." The strategy failed because it lacked leverage. While Trump saw unpredictability as strength, the rest of the world saw it as weakness. Markets adapt, governments plan, and when threats lacked consistency, they were ignored. Ironically, the only players still reacting were the ones Trump claimed he was protecting. American companies, watching demand fall and costs rise, waiting for relief that never came.